Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MIRION Technologies INC quarterly report. MIRION Technologies offers a diverse range of businesses and services across two segments, medical and nuclear and safety. Medical segment, radiation oncology quality assurance and dosimetry solutions, patient safety solutions for diagnostic imaging and radiation therapy, centers radiation therapy quality assurance solutions, radionuclide therapy products, nuclear and safety segment. Personal radiation detection, identification equipment, and analysis tools, radiation measurement and monitoring solutions, reactor instrumentation and control detectors, imaging systems and cameras, waste management systems, laboratory and scientific analysis systems, contamination and clearance monitors. The stock price of MIRION Technologies, Inc. has skyrocketed by over 100% in the past year due to a combination of strong financial results, optimistic future projections, and a favorable environment in the nuclear energy sector. Key factors contributing to this significant increase include robust third quarter 2025 financial results, exceeding Wall Street's profit expectations, and an optimistic full-year outlook with projected growth in profit margin from 1.1% to 9.4% by 2028. Additionally, increased analyst ratings and price targets have boosted the stock, with several prominent brokerages raising their targets and maintaining strong ratings for MIRION Technologies. The renewed optimism surrounding the nuclear energy sector has also positively impacted the company's growth, as its essential nuclear safety equipment and waste management solutions are linked to new nuclear build projects and modernization campaigns. The primary drivers of revenue growth or decline are primarily attributed to the performance of specific business segments. The nuclear and safety segment has been a significant contributor to revenue growth, with a 9.3% increase in revenue from $132.7 million to $144.6 million. This growth is driven by increasing demand for nuclear power plants and government acceptance of nuclear as a clean energy source. The medical segment also experienced revenue growth, with a 6.1% increase from $74.1 million to $78.5 million. Additionally, the acquisition of Paragon Energy Solutions is expected to contribute to revenue growth in the future. In contrast, there are no mentions of revenue decline in the provided summary. The drivers of revenue growth can be summarized into three key areas. 1. Increasing demand for nuclear power plants and government acceptance of nuclear as a clean energy source. 2. Strong performance of specific business segments such as nuclear and safety and medical. And 3. Strategic acquisitions like Paragon Energy Solutions. Net income and profit margins. A turning point for the company's financial performance has undergone a significant transformation over the past year. Net income has made a remarkable turnaround, increasing from a loss of $13.6 million to a profit of $2.9 million in just 3 months. This trend continued through the 9-month period, with net income rising by $62.6 million. The improvement in net income is mirrored in the company's profit margins. Gross profit margin has increased from 45% to 46.7%, while operating profit margin has risen from -0.6% to a healthy 7.3%. These gains are a testament to the company's efforts to streamline operations and improve efficiency. The reasons behind this turnaround are multifaceted, but it is clear that the company has made significant strides in reducing losses and increasing profitability. As net income continues to rise, so too do profit margins, indicating a sustainable shift towards financial stability. The company's financial performance indicates a significant improvement in its ability to generate operating cash flow. A comparison of the 9 months ended September 30, 2025 and 2024 reveals a substantial increase from $38.3 million to $70.3 million. This upward trend suggests that the company is successfully managing its operations to produce positive cash flows, indicating financial stability and growth potential. The company's debt level and interest expenses have undergone significant changes. The non-current debt has decreased from $685.2 million to $443.2 million, while total borrowings increased from $0 in December 2024 to $444.8 million as of September 30, 2025. Convertible debt also rose from $0 to $753.6 million during the same period. In terms of interest expenses, there is a notable decrease of $12.5 million from $39.6 million to $27.1 million. Additionally, net interest expense decreased by $6 million from $12.7 million to $6.7 million. However, the company incurred a new expense in 2025 loss on debt extinguishment, which was $5.8 million. Overall, these changes indicate that the company has managed its debt level and interest expenses effectively, resulting in significant reductions in both areas. The company's financial performance varied across different segments and regions. The medical segment stood out as a strong performer, with revenue increases of $6.7 million, $17.9 million, and $28.3 million, and income from operations growth. The nuclear and safety segment also saw significant improvements in revenue and income from operations. In terms of regions, North America and Europe demonstrated solid performance, with revenue increases of 5% and 6%, respectively. Conversely, the Russia region struggled due to the ongoing conflict with Ukraine and resulting sanctions, leading to poor performance. On the other hand, the corporate segment experienced a decline in profitability, with increased costs and losses from operations. The corporate and other category also saw an increase in costs, primarily driven by compensation expenses and mergers and acquisition expenses. Management is maintaining a steady course for the company, with no material changes in strategy or outlook. Key highlights include continued growth expectations, with 26% of remaining performance obligations expected as revenue in 2025 and increasing percentages in subsequent years' strategic acquisitions, such as the $82.2 million purchase of Certrec. To expand offerings in key market synergies from acquired businesses are expected to contribute positively to results effective management of debt through refinancing and amendments to credit agreements, active monitoring of risks, including inflation, interest rates, and geopolitical conditions overall. The company is positioning itself for long-term growth while managing its financials and mitigating potential risks. The company has made several strategic moves through acquisitions and divestitures to drive growth and optimize its operations. Acquisitions include WCI Gigawatt Intermediate Holdco, LLC for $585 million in an all-cash transaction Certrec business combination acquisition of related businesses to fuel historical growth contracts associated with construction of new nuclear power plants. On the other hand, the company has also divested certain assets, including the rehab business, resulting in a $1.2 million gain on disposal. The company has demonstrated a strategic approach to managing its capital structure through share buybacks. Specifically, during the 9 months ended September 30, 2025, the company purchased $49.6 million worth of shares for treasury purposes. This move is consistent with the company's efforts to optimize shareholder value, as evident from the use of proceeds from a recent debt offering in May 2025 to fund this share repurchase initiative. And that concludes the financial summary for MIRION Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.